Hey traders, this is Ron Haidt at Market Tamer. Happy Hump Day, happy Wednesday. Hope you're having a fantastic day. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk and specific financial issues should always be addressed with your financial advisor. We'll kick off here with the SPY. And today it hit new all-time closing highs. Bulls continue to have the edge. Again, watch that red line, the 20-day EMA, exponential moving average, as a guide to see if the trend begins to turn. Now, interestingly enough, check out MDY, which are your mid caps. They had a nice thrust today, 1.43%, decent volume too. They finally cleared some previous highs and the swing highs from April. Double swing highs were broken. Now the all-time highs up there towards 370 are now within view. Also, the small caps, the IWM, up 1.65%, a little bit of a pickup in volume. They closed above the previous closing highs. If they take out that 160 area, then their target is up there towards 170. So all of a sudden, small caps, big caps, at least for today, joining the party. Stocks with earnings today. So Boeing came out with earnings down 3%. I was reading an article that talked about a kitchen sink type quarter where they're just throwing everything in as a loss. But my commentary and thoughts from previous days still apply. Anything can happen. They're losing orders to Airbus. The 737 MAX is a disaster. They're placing the value apparently of each life at 150,000 US dollars or so forth. Bit of a train wreck right now. And until this gets resolved, I would be very, very cautious. Somewhere up here, like I've been saying, around 400, above there would be technically bullish. And then we get back below 340, that would be bearish. And then the target is down here. So until then, regardless of the noise or opinions or whatever else you want to hear, that's the type of trading range we're in. We get outside of that, then a direction, technical direction, could take place with a more higher probability, if you follow what I'm saying. Another stock, earnings, Caterpillar, big high wave doji. And I have a lot of drawings in here. I'm going to go ahead and delete everything. This is a massive high wave doji, big volume, not epic, but certainly big. We were up as high. What was the high today? I thought it was like 134. The low was down around 128, finished in the middle. Because we are below the 20-day EMA, that outlook, the 20-day period, is now bearish. We held the 50 and the 200 at the end of the day. If we fall below basically today's intraday lows, the close down at the lows, that puts 120 as the target. So right now on the daily chart, bearish. And if we get below today's intraday low on a closing basis, even more bearish. For this to become bullish, we need to get back above at least yesterday's high. But frankly, I'm going to go back 2 years on Caterpillar. If you're watching this, we got to take out 140 and even maybe into 142. So there's a lot of work on the upside, almost 10% higher to truly break out. 3M, this was a stock that was taken to the cleaners. If you think back in April, it was above 215. Then beginning of June, when the market bottomed, it was at 160. Well, the stock pushed higher today. The target now is going to be the 200 period at 190, and then all the way up here to the gap fill towards 195. UPS, big move today, up 8+%. That was massive volume. It took out the previous almost double top back here in April, and even the spike high from December. Next target, 121, 122 ballpark, about 7% or so higher. Texas Instruments, huge move, 7%, big volume. A question that comes up quite a bit is, with the market up at these highs, and you have earnings reports that are followed by massive explosions to the upside, and they hit all-time highs, where's the target? Infinity. There is no target. Here's all the data on Texas Instruments. Massive move. This is a monthly chart, but you can see where we're at. We're at all-time highs. We could use Fibonacci extensions and so forth like that, or guesses, or I suppose even Elliott waves, which I'm not a huge fan of. But no matter what it is, it's a breakout. Therefore, what would I use? 20-day EMA as a trailing stop for momentum based. Just almost, I use that so often in my trading and my technical analysis. I think it's really helpful. Another stock, Facebook. They had earnings after the bell. Let's see where they're at. I'm recording this at 4:20 p.m. Eastern, 4:23. We're at 204. We're now at 209. We were up around 214. So we're pretty much right around there. If I bring back a 2-year chart on Facebook, right around here. So we're challenging that gap up before the earnings crash. But here's the thing, they also agreed to a $5 billion fine. I guess that's just the price of doing bad business and getting away with it and taking advantage of people, but the stocks absorb it like it's nothing. It's just, they're sort of like the bankers. You just pay enough fines, do the bad stuff, and nothing ever happens, right? From a technical perspective, the stock is going to open up bullish tomorrow if it finishes around these prices, but it's not a massive gap up, nor right now is it a massive gap down. I would watch the red line as an end of day trailing stop. I had a question on Tesla because we're coming into a target. We highlighted Tesla breaking out a while ago, back here at the beginning of July. And it's once we got above the 50-day, that was the breakout. The target was the 200-day. The 200-day right now is around 281. We're at 264. I went from about 225 to 264. That's not bad, almost 40 points. There's still more left in the tank, but the company has earnings, so just be aware of that. And Netflix. The question was basically, why did Netflix gap down? Was it because they missed numbers? Here's how I view earnings reports. When I first got into the market, everybody told me that earnings reports matter. And more as I go through learning, trading, earnings reports only matter if the big money cares, is the bottom line. And you've heard before companies have great reports, yet the stock sells off. If you take a Buffett type view as an example, buy it today, hold it for 10, 20 years. That's different than maybe swing trading, which is more of the type that we talk about here in these videos, which is shorter term daily trading cycles. Right now, the stock is bearish. Today, sure, it was up 3.46%, but it's done nothing to indicate a bottom is in yet. We have a little bit of a U-turn going on, but we would at the very least, need to get above a 5-day or the 8-day, which is the blue line in my video. So when it comes to earnings, they can be amazingly great. They can be really bad. What is the big money doing to that? And if they sell it, they're not happy right now. I have no idea what's going to happen 3, 6, 9 months down the road type of thing. Fundamentally, this could be a buying opportunity if you're a bull on Netflix. Just like when Buffett was back buying Apple below 100 when those reports came out, and then it started to take off. So long term, no idea. Short term, they're not happy with the numbers. Could it be manipulation and other things? I have no idea. It's purely speculative, but the direction is down. So I always do like protective puts for stocks. I think it's a great idea. And right now in this situation, I would still keep a protective put around until I see more evidence of a bottom in a stock like Netflix. Bottom line, stocks move based on big money, not based off little folks. So right now the big money was into selling Netflix. Doesn't mean they're not going to come around and buy it next week. It's very possible. But right now, they're a net seller. Okay, last but not least, I want to show you guys some stocks that I brought to you just as a heads up. I talked about Pod, Expedia, and Cerner as seasonal trade ideas back in May. If you look back to the S&P in May, you can see that the beginning of May marked the peak, and then June marked the bottom. It was literally day to day a 1 month sell-off. But Pod was one of the stocks that has an incredible track record. What did it do? While the S&P was selling off, Pod ripped higher. It kept going in June. It's kept going in July, but there is an earnings report coming up. Even on seasonal trade ideas that I bring you guys, or any trade idea, earnings is a gut check. It's time to see, hey, what's my risk exposure? For swing trades, for seasonal trades, why not consider taking some profits? I mean, this stock went from the low 90s, mid 90s, all the way up to 123, pretty much in a straight line, right in its seasonal window. I would be closing out the majority of my trade idea, or all of it if this was me. How about Expedia? Because again, you just don't know about earnings. Well, Expedia has an earnings report coming up. I remember having a webinar with you guys talking about the end of May, and it was starting to turn bullish. The seasonality was very bullish. But look, May was bad. The moment we got above the 50-day, the stock goes from 122 to 137. Another fantastic idea about taking profits. But we knew about these stocks because they were likely to rise because they were in their seasonal window. If you look at it from that standpoint, past performance is no guarantee of future performance. I always tell you guys that. But Pod, Expedia, and Cerner were entering their seasonal windows. So if there was any stock I wanted to look at, it was these guys. And look what happened. Pop goes the weasel, right on schedule. And then here's Cerner. Remember, May was bad for the market. Here was Cerner. It actually went up a couple bucks, went up higher, and then it would have stopped itself out on the 19th when we got below the red line. So this one is even over before the earnings report comes through. So Pod, Expedia, Earner, Under Armour was another one. There's been a lot of great trade ideas. I know we looked at NDAQ, NASDAQ. This one would have been over right here, right before the earnings report. So giving all this back today, not an issue. This was a quick triple-digit win from here to here, and the final stop out would have been the day before earnings. Again, this is why, even with seasonal trade ideas, there can be biases to earnings reports historically, and there are. I've shown you tons of them. But this is also why when you have winners like this, not a bad idea to take it off before earnings because you just never know, right? So I hope you find this helpful. I hope you enjoyed the seasonal trade ideas. I'll keep bringing them in, and I'll be back with you guys in the next video. Have a great day, and I'll see you next time.